Hi guys, my name is Nicolette Mashile. I am also known as the Financial Bunny. Welcome to the Financial Bunny TV. Today we're talking all things Forex trading strategies that will help you figure out the type of a trader that you can be. Now remember that none of my videos constitute as financial advice. If you are looking for financial advice please do speak to somebody that is certified with their FSCA to be able to give you that financial advice that you're looking for. After all, it is your hard-earned money that you are going to be trading with. And we don't want losses. We want to make sure that you've got the right information so that you make those well thought out, risk averse trades when it comes to Forex trading. And this video is brought in partnership with OctaFX. OctaFX is an international Forex trading broker. So let's get straight into it. When we talk about different types of strategies, we're talking about looking at things like your sentimental analysis, your fundamental analysis, or your technical analysis. And in this specific video, we're going to be looking at sentimental analysis. And we talk about sentiment is you ideally want to know how the market fares, how the market psychologically thinks, and how the market psychologically behaves. And I'll give you an example before I get into all of that. When we started, I was in an advertising agency at some point in my life. And when we started going into the social media space and bringing our client into the social media space, we contracted what is called a digital agency to go and test what the sentiment is of the brand in the market. So we knew how to go about actually communicating the brand in the market. So for instance, if you've got a specific brand and you go for, let's take Financial Bunny, for instance. I know right now on Twitter, Financial Bunny is going through a sentimental crisis, right? But basically what happens is that if you go into the market to test, for instance, how your brand fares, you may find that people will give you certain sentiments about your brand. They'll say, no, we like that brand because it does 1, 2, 3, 4, or we like this brand. Like I would get people saying, we like the Financial Bunny brand because it makes us feel a little bit closer to our money. It helps us take control of our money. So then that helps you plan the type of brand culture that you want to foster, the type of approaches that you are going to be making in terms of how you're going to run the actual business. And that's basically what sentiment is. When we look at the markets, we look at specific things in the markets that could potentially influence what the market is. For instance, right now, we've seen when you look at the stock market, it is in a bear market because it has lost almost 20% of its valuation across, right? And we're talking about now the global stock market, right? South Africa's JSE has also taken a bit knock. It is in the red, maybe potentially not as huge as the global market, but we are seeing some drawbacks from the stock market. And that means that the market is in a bearish market. So you've also got to look at, the different factors that then will influence the type of sentiment that the market is going to be showing you. And these could be things like if you look at Russia invading Ukraine, that is a level of crisis, right? That is happening in areas, economic areas that also have currencies and could potentially be currencies that you might want to trade if you're doing Forex trading. So these are some of the things that you've got to look at. You look at interest rates, inflation rates. So, what are reserve banks across economies doing? What decisions are they making? What monetary policies are they actually introducing? Events, political events, all of these things start to give you from a macro perspective and a micro perspective factors that are going to influence how the market reacts. And how the market reacts can have an influence on currency movements. And that is the type of trading analysis that you would be doing. You'd be looking at the sentiment of the market, and based on that, you then create what is called a trend in terms of saying, when this specific thing happens, this is how the currency is going to behave. And if you look at the different currencies, you are going to start to see classifications of different types of currencies, right? So if you look at, for instance, the United States dollar or the Japanese yen, which are considered considerably safe haven currencies. So when there are drawbacks in the market, these currencies generally strengthen. So you would need, if you are going to be having a currency pair that includes the USD market or the Japanese yen, these are the types of markets that you would then say, okay, this currency, when something happens in another geographical area or even in their specific immediate areas, these currencies actually, because they are safe havens, they tend to actually strengthen when we are in these types of conditions. We've also seen sometimes that when there is uncertainty in the market, a currency like Bitcoin is one of those that also kind of strengthens. And often you ask yourself, what is actually the sentiment around Bitcoin? What does the market feel about Bitcoin? And I mean, you go to countries like your Dubai's, you go to countries where reserve banks are now considering conversations around Bitcoin, or at least cryptocurrency or blockchain as a technology. You start to see that in those countries, these currencies, these cryptocurrencies have some sort of sentimental leverage, right? But you come to markets like, your Africa, where take South Africa, for instance, where Bitcoin or even just any other cryptocurrency, because the market sentiment of that currency is not yet established and that strong, you see that the market will sway the pricing and the fluctuation within that specific market. And then you look at currencies such as the Canadian dollar or the Australian dollar. These currencies are called commodity currencies. And the reason they're called commodity currencies is because they are strongly interlinked to a specific commodity. And that commodity could be your precious metals, it could be your oil, it could be your rice, your wheat. So these types of currencies are quite interlinked to those commodities or specific commodities. And that means that whatever market movements happen in those commodity markets could potentially have some level of factor or effect that would then happen to these types of currencies. So all of these types of things are things that one needs to take into consideration when they are putting together their Forex trading strategy, and of course also looking at the planning. So what type of positioning are you going to take? It gives you a platform to be able to do analysis so that when you do make trades, we are making them from a place of having done your pros and your cons to be able to mitigate and try to minimize as much risk as possible. Because at the end of the day, if you're going to be a successful Forex trader, you do need to mitigate, manage risk so that you can optimally make the trades that are going to give you that success. Just a reminder again, none of my videos constitute as financial advice. If you are looking for financial advice, please do speak to somebody that is certified and registered with the FSEA. Now, this has been a partnership with Octa FX.